Good afternoon, everybody. This is the first Thursday edition of Macro Dashes, which I'll be doing every Thursday. This is a replacement for the Friday morning webinars. I moved them to Thursday afternoon so that I could get out of work a couple hours early on Fridays and hang out with my grandson, part of his Jedi training. I hope you forgive me for moving it to Thursday, but it does mean that I'll have this posted late Thursday night usually. If not first thing Friday morning, so that you can see it going into the trading on Friday, which I think from time to time we're going to use this webinar to pick out trades that we might want to make on Friday. In any case, big news is still Ukraine, and I wanted to talk about an aspect that I don't think is being really covered very much. I've looked and looked and looked and can't really find anybody talking about it, so I'll write an article about this. I think that something is happening here that Dale Pinkert over at Forex Analytics asked me about last September when I was on his show. And if you're not familiar with Forex Analytics, I do think it is something that for free, they have a show every morning that you guys can watch. And it just talks about different macro items and trade setups and things like that. I don't get anything for referring you over here, but if you are really trying to trade more, particularly futures and options, but mainly commodity linked things and the S&P 500, Dale Pinkert is over here. He's one of the folks that Shooter, our technical guy, has learned from, and that has turned out to be like the best recommendation I've ever gotten for a technical trader. I mean, not even close, really. I've never seen a technical trader hitting over 80% of his trades like Shooter does. You know, other technical trading guys are superstars if they hit 60%, and here Shooter is at like 80%. If you're not, swing trading with him, if you're a swing trader, and not everybody's a swing trader, and 4 out of 5 people shouldn't be swing traders. But if you are a dedicated swing trader learning technical analysis, you probably want to hang out in the chat room at Fundamental Trends with Shooter. In any case, the big topic that I wanted to cover today comes from a question that Dale asked me in the interview, and he said, what about the idea that the Democrats in particular, but in general, the government wants to see higher oil prices to help with the transition to clean energy? And I was like, well, I understand the point, but I don't think any of the politicians really want to see the price of oil high, because then they don't get reelected. And that's their number one mission in life, right? I mean, politicians' number one mission in life is to get reelected. We're on the list somewhere, but their number one mission in life is to get reelected. I think most of us who have been around a little while have come to accept that even the good ones, they still want to get reelected no matter what. And, that's why we never got term limits. So with what's going on with Ukraine, I start thinking about that phrase, never let a crisis go to waste. And I think that Saudi Arabia and Russia have kind of screwed themselves. I really do. I think that them pushing up the price of oil, which is something they've conspired to do the last couple of years, first with holding back on production and then not kicking it in to a higher level 6, 8, 9 months ago. And now Russia invading Ukraine, which is all sorts of disruptions. I think the price of oil is going to stay above that $60 to $80 barrel range for just a little while longer than I thought it was. Now, of course, 2 years ago, I said the price of oil will go back to 60 by this year, and we're way over that. So what happens if the price of oil doesn't drop back down to $80 or lower in the next year? I don't think it's going to be over 100. And I do know, and as we've talked about, that Exxon and Chevron and the other Texas producers, for the most part, Occidental and Pioneer and EOG and Conoco and a few others, are ramping up production, so that we'll have another 1,000,001, 1,000,002, 1,000,003 barrels a day of production in the United States by about this time next year or slightly before. So the oil shortage will go away pretty quickly, at least in the United States, because the president could always just say, stop exporting it. And then if we stop exporting our oil, we got more than enough when you consider what we get from Canada and nearby. So what happens, though, if the price of oil is stubborn? What if it stays over 80 throughout this year and then really doesn't get much below 80 even after that? What if that 60 to 80 range is more of a 70 to 90 range? Could happen. Do consumers start using less oil? Does government have an incentive to tighten up the rules? Do companies and industry and organizations and then big investors stop financing more fossil fuels and push it into cleaner energy? And I think the answer is yes to all the above. I think that the price of oil is probably headed to that 60 to 80 range eventually, but it might take longer than I thought. It might take a couple of years instead of, being stuck there right now. Clearly, we're above it right now. If people are driving around this summer in the United States, and we're very stubborn about cutting out our driving, that means that even though we added some inventory of fuels lately, price of gasoline is still going to stay pretty high. I just spent $100 on a tank of gas for my 4Runner for the first time in, I don't really know how long. It's been years. I haven't had a $100 fill up in years. And suddenly I have a $100 fill up. And I think about the consumer, the American consumer. What car are they going to buy in the next year or two if they can? I don't think it's going to be a gas guzzler. I think that some of the hybrids that are out there, which are about the best that we can do right now on trucks, are going to be pretty popular. Stopped at a Ford dealership yesterday, actually. Today's Thursday. Yeah, yesterday. And asked to see a Mustang Mach-E. They didn't have any. Asked to see a Lightning. They didn't have any. And we talked, and the salesman didn't really know the status of things. He was a kid, 20-something, but he wasn't real well informed. I ended up telling him some things. I said, well, the factory that Ford's building in Kentucky is going to be the biggest factory in the world, at least for a hot minute. It's going to make the Tesla factories look little. 30 plus square miles. That's a big factory. And the Intel factory going up in Ohio, which is going to produce semiconductors that the cars need, is going to also be ginormous, just huge. So those companies move to where the water is. That's what they cited. And now they're going to have huge production, but won't be up and running for 2 to 3 years. So between now and then, hybrids are probably what's most attainable for people. And it's an intermediate step for, I think, a lot of the truck and SUV buyers, because Ford has a hybrid Explorer and Toyota has a bunch of hybrids. So there's a lot of hybrid cars out there that don't always sell fast, but now that people have to make a decision if they're looking to buy in the next year or so before production ramps up again, I think that's probably the way they're going to go. And then a few years out, and let's presume that there's some sort of an incentive for buying EVs. I think that's going to happen. What do people buy with a memory of $100 fill-ups fresh in their head? $4 a gallon gasoline. I think people are going to remember that. So I think in the next 1, 2, 3 years, I think we're going to see an acceleration of hybrids being purchased in the short term, because that's what there is. And then EVs as production ramps up. And it's, I think, the first step to clean energy really taking off, because we are learning some things about climate change right now, and they are not good. So I'll go through some of that. First off, Putin is feeling cornered right now, starting to fire his own generals and clean out some of the security apparatus in Russia, because I think he's probably afraid of them. You know what that makes me think of? Deadpool. Where's the Deadpool on Putin? I don't know. I might have to throw 100 in on that one. I'm wondering if Putin could be dead by next month. Think that's out of the question? I don't know. I think it's somebody just posted Putin pending a hunting accident. Maybe he can go hunting with Dick Cheney. I think that Putin is walking a fine line here, and he has to somehow declare victory somehow. I actually posted to our president somewhere on my thread that very interested in Garrett Wilson and Christian Watson for the Packers. Oh, here you go. Here's the post for the president. I think it's time that we gave Russia and Putin a way to save face. Because I don't think that the people who are against Putin in Russia are going to forget, even if he does have a way to save face internationally. I think it'd kind of be like a rope-a-dope that results in some good things here. I think that we should really encourage Ukraine to negotiate a deal where they're neutral and we put a little pressure on Russia, I'm sure the president can make a phone call and say, look, man, try to figure out a way to buy Crimea and Donbass and offer them a path back into the global economy over a long period of time. And of course, you can't tie it to Putin not being there, not up front, but you can add conditions later. And as you negotiate down the road, you can change the ideas, change what's in the agreement. Oh, that's not how we agreed to it. China does it to us all the time. In any case, I don't know exactly how they negotiate things, right? These are just, spitball sorts of things here. But Russia is already moving their troops east. That happened in the last 24 hours. And they're clearly most concerned about the Donbass region and a connection to Crimea, having a land bridge. So in the short run, you can say one thing to get the fighting to stop, to get some of the supply chains for fertilizer and energy back in line, and then you can renegotiate down the road. And I would think that Putin isn't long for his position, no matter what. Now, I'm not in the room where it's happening, so maybe the United States is in an end game with Putin, and they can't encourage these types of deals. Maybe they just let Ukraine handle it themselves, whatever they think. I don't know. I'm not in the room, right? If you watched Hamilton on TV, or if you've gone to see the play, there's a lot of things that happen in the room that we never know about. But I think we're getting to the culmination of the Ukraine situation. And I think it'll happen. I thought it would have been happening about now. Maybe it's going to take a few more weeks into April. Maybe there's a coup in Russia. Maybe something happens. I don't know. But I don't think it's the end of the world stuff that people worry about. What I do think is that these things always resolve eventually. It's horrible for the Ukrainian people, right? I'm not downplaying that. But I think it impacts, as an investor, I think it impacts the way that we should think about energy. These sorts of disruptions aren't going to go away if we remain so reliant on fossil fuels. And I think the American public is acutely aware of that. And if they just make a small change in their behavior on what kind of cars they buy, we start to solve the fossil fueled supply problem by reducing demand. And I think reducing demand on fossil fuels is clearly the easiest way to get rid of these types of shocks, this type of economic dependence. Now, when I tell you things like that, I didn't just pull it out of thin air. There's a lot of tabs up there, isn't there? If you go to Bloomberg Green, and I'll just tell you, Bloomberg is the one thing you have to subscribe to. It's that good. It's better than the Wall Street Journal. It's better than everything else out there. Better than the New York Times, Washington Post. This is the absolute best source of information for investors and people that want to be informed about the economy on the planet. I just don't think that anybody's really close anymore. So if you go to Bloomberg Green, you start seeing these headlines, how the world's richest people are driving global warming. So there's your target. That's who government's going to go after. The big owners of fossil fuel owning entities, the controlling shareholders, the oligarchs, whatever you want to call them. That's your target. So if they're the target, what's going to change? I think the transportation issue is the easiest one to change quickly because you can influence consumer decisions pretty easily. When I say that as a former salesman. Go look at the raft of books at a bookstore, right? I think there's a couple left out there. Or on Amazon, I hear they sell books. Or that other bookstore, Barnes & Noble. Yeah, those guys. They're still around too. And take a look at books on sales. And what you learn if you ever studied sales is that most sales are emotional and based on some sort of recency bias or some sort of bias that the potential customer has. So in this case, potential customers are everybody who might want to buy a car in the next few years. And they're feeling the heat from higher gas prices. Hybrid cars only cost about $1,000 to $2,000 more than a pure ICE vehicle, right? Internal combustion engine. Only $1,000 or $2,000 more. It's not like the difference between an EV and an internal combustion engine car. It's not $7,000 or $8,000 or $9,000 or $10,000. It's $1,000 to $2,000 in most cases. So you can buy the hybrid version of an Explorer or a Highlander or a Camry or whatever else is out there for less than $2,000 more than you buy the internal combustion engine version. If you're afraid that the price of gasoline might stay really high and recency bias is telling you that, and you need a car because you cracked one up or one got old or whatever, somebody turned 16 in the household and you give them the old one, please don't buy the kid the new one. It'll wreck them. It'll just wreck them. And I think you're going to see that change happen pretty quick. And then the EVs are going to come and they're going to have tax incentives wiping out the price difference. This number right here is how many parts per million CO2 we're adding to the atmosphere pretty quickly. Was it every second this is going? Now, there is an article up here that I pulled, and it had to do with monitoring global carbon emissions. Suddenly, right? Remember after COVID or during COVID, CO2 emissions went way down. Biggest drop in history, 8.7%, because we weren't driving as much. Suddenly, 2 years later, we are actually producing more carbon today than we were in 2019. And we're falling behind on all the targets, which weren't very good targets to begin with. They were too high to begin with, on what we're doing to wreck the planet. Now, you don't need to agree with the 90% of scientists who agree with this. You can agree with, whoever you want to agree with. But when the money starts moving and the legislation starts going, and both have already began, we're very close to hitting a spot where clean energy investments starts to go up way more than it's been going up, and it's been going up pretty fast. We're about to see a huge shift in the next 2 or 3 or 4 years, right into those mileage laws that kick in 2026. Now, I wasn't sure this was going to happen before 2026 or 2027, but I think the high oil prices are accelerating the transition. So what does that mean for us as investors? Well, if you take a look at the sources of greenhouse gas emissions, this is right on the EPA website, you see transportation is 30%, 29%. That's the first thing that's going to change. But the utilities are already pushing into solar and wind. So utilities are going to produce less carbon. And industry, via regulation, is going to produce less carbon over time. Probably take some time for this to happen. But industries like concrete and steel are starting to get alternative ways of doing what they need to do. And that's a long-term thing. That's a 10 to 20-year thing. Whereas the transportation is probably starting right now, will have a pretty significant impact within a couple of years, and then even more impact over time. And the utilities as they move to cleaner and cleaner energy. So you could see half of the greenhouse gas emissions cut by more than half. So basically get rid of one part of this pie, just pull it out, because both of these can go down in half easy. They can both go down about 70% over time. Pretty easy as they move towards their zero carbon emission limits. And then you get regulations like this, right? Part of our 4-step process. Identify the secular trend. The secular trend is away from fossil fuels and towards clean energy. Now the SEC wants all public companies to report their carbon emissions. What is that the first step of? Some sort of way of taxing it or doing cap and trade or something. Small companies, which are financed by wealthy investors usually, what are they rushing into? This is a Wall Street Journal, very conservative editorial page, right? They're rushing into carbon industries, carbon regulation industries, monitoring, right? How to monitor greenhouse gas data, including from their supply chains. So some of the things that I expected to happen in the middle of the decade, and you've heard me talk about 2026 and 2027 a lot of times. I think that's getting moved up, not in whole, but partially, so that rather than really kicking in the reduction in transportation greenhouse gases in 2026 and 2027, I think that stretches from 2027 to like now. So it's a smoother curve over a longer period of time, but it's starting earlier and probably is further along by 2027 than I think it would have been otherwise, because Saudi Arabia and Russia conspired to keep the price of oil higher by not increasing supply as demand went up. And now Russia apparently, I think at this point it's pretty apparent, they've really miscalculated in Ukraine. It wasn't a rollover military exercise. It was them getting into a war that they're not going to win. Now, they could assure, both sides lose, or they could pull back to the eastern frontier and just hunker down there, which is what I think is going on right now. If you watch the satellite images, Planet just had a bunch of satellites that got published, I think, in Bloomberg, that shows that the troops are starting to move east. That's where they're focusing. They're going to try to hold Donbass, which I think they'll be able to do, and they're going to negotiate from that position. I don't know what that end game is. I don't know if Putin stays in power. I don't know if he lives or dies. I do know that Ukraine doesn't want to have to suffer anymore. And that's a horrible spot to be negotiating from. But, we get torn as investors between what we feel ethically and emotionally, between what we have to look at long term is, okay, what's good for my money and what's probably good for the world. And I think clean energy has really become a focal point for all of you. You need to put behind you any biases that you have. And I know that people want to talk about nuclear energy and other stuff. Here's the problem with nuclear energy. I'm just going to throw this out there for you because I've been convinced of this for 20 plus years. The problem with nuclear energy, number one, is NIMBY, right? Not in my backyard. It's number one. Number two, is it takes a really long time to put it in place. We don't have a decade to 20 years to wait anymore. So it's too late, I think, for nuclear, just because of the way the timeline is working with climate change. Finally, I guess it's not finally, there's two things here. But next is the fact that technology for solar, wind, and batteries, and a handful of other things in energy, capturing tides, things like that, geothermal, has caught up. It really isn't that hard to put solar all over the place. It's not expensive. Batteries aren't cheap, but they're getting cheaper because if they're not space constrained, they don't have to necessarily be lithium and rare earths. We've talked about that before. Then here's the other thing. In a world of decentralized finance, right? In a world where people want to have less centralization, even guys like me, what is the nature of nuclear energy? It is highly centralized by location and ownership. And the utilities only build it if they get an incentive because it's super expensive to build. They make their money back over a long period of time, but that's not always a great thing for shareholders. So there's a lot of things conspiring against nuclear energy. I'm not saying that as the technology doesn't advance, that we don't get to the point where we can do really small reactors and decentralize them and have reactors that can't melt down and don't really produce waste. I think that will happen someday, but I've been waiting for it to happen for 30 years. I've been watching that since college. We're not there yet. So the idea that suddenly we're just going to build 100 nuclear power plants in the next 10 years is it's impossible. It can't happen. Whereas we can pass a couple of laws, maybe give a couple tax incentives, and suddenly you're going to have solar roofing everywhere, particularly in industrial parks and other commercial buildings. I've done the research on putting solar on a new building in our condo project. It would power our garage, our office, all the lights on the property, and the heat for the pool for cheaper than what we pay for the utilities today with the current tax incentives, not even with what might be coming. So I think that if you haven't jumped on the clean energy bandwagon, you need to, from the standpoint of, I think it's suddenly coming faster and bigger. Maybe not by magnitudes and magnitudes, but by more than it was before and faster than it was before. Now, if you have TradingView, and I do encourage you to have this, they have their idea pages. The Invesco Wilder Hill Clean Energy ETF is one that I told you about over and over again. So I want to take a look at one of these charts for you. Let's see here. Long, short. Let's go to the short one. Let's go to the contrarian. So this guy, might not be a guy, is saying that PBW could get down into the low 40s. I originally had this orange box down at 42, which is why I picked this, because he said he could see where it could get down to 52. Then he also had a price around 60s. And as you know, a couple of weeks ago, I said, you should probably buy a little bit of this, just as it was bottoming. Now it's rallied. So I would expect to get some retracement, just a little under 60 would be my guess. But again, we'll consult Shooter. But this is a great one for you to sell cash secured puts on. So I'll have those trades up. If you've seen the new retirement income options article and the new stocks of the week's article, it really makes the trading instructions much easier, which is what you asked for. So I think the trade is going to be, let it come down a little bit and then sell some puts and probably take a starter position if you don't have one. I've got about 8% of my money in here right now, 6 to 8%. And I was higher for a hot minute. I traded a little bit of this rally and then I cut my position. But I want to keep my starter position on because ultimately I think that these companies for the next 4 or 5 years are to the moon's types of investments. And why do I say that? People want to say they're not profitable. That's not true. Solar Edge, Enphase, First Solar, a lot of these companies are profitable. And that's who makes up the ETF. And then this ETF expands into other types of clean energy investments, not just solar. That's why I use it. If you take a look at TAN, which is the solar ETF, performs pretty similarly, right? So you can use PBW and be more diversified. And if you want, trade TAN, right? If you want to trade solar a little bit, but keep your core position here. The other one is QClean on our list. And it's very diversified. It has performed just as well. So any of these three funds, Q-Clean, I think, has outperformed a little bit because it's a little bit bigger cap. PBW is a little bit more small and mid cap. I do think that this one has as much juice as the solar ETF with a little bit less volatility. But if you want to more purely just follow the broader sector, then Q-Clean is there too. So it just depends on how concentrated you want. But you can see that they're all pretty close. So I don't think you can screw up no matter how you do it. But I do think the solar ETF is more for trading. Otherwise, pick between PBW and Q-Clean. They're both big, so you have no problem with liquidity. But I really think you need to consider what you're seeing here. This is what's happening. We know the institutions are divesting fossil fuels, right? Less money means less production. It's a slowly dying industry. Here's your targets. That's who the governments are going to go after. So by extension, what they're into, which is coal, oil, and gas. Total, who I told you years ago, if I was going to invest in one oil major, it'd be Total, because they are the furthest ahead in the clean energy transition. And they were cheapskates on buying property. So they don't have anywhere near as many dead assets as some of the other companies. And just for kicks, I'm going to talk to you about this to close, because you know I'm a notorious Exxon hater. This chart right here, Diversified Energy has been buying up all the conventional wells in the country. They don't require a lot of work. Eventually they have to get plugged. But these guys are doing what's called the runoff. They're absorbing the free cash flow from those wells. Exxon is the second biggest holder of conventional wells in America, and then Chevron, then Hillcorp. I don't know anything about these guys. And then this company, Occidental Petroleum. The reason why Berkshire is buying Occidental Petroleum, and I think is going to end up owning them, is for the conventional wells. They're extremely low expense, and they just basically drip out free cash flow, which is what Berkshire looks for. And their acreage in the Permian, right, with the Anadarko acquisition, some of their other acreage that they're just trying to get rid of, are pretty good places for natural gas in the intermediate term. So in the very short run, while the prices are high enough, they can frack when it's economical, when supply and demand dictates it. So the low-cost conventional oil that just kind of trickles in, pretty good deal, right? So Berkshire is going after Occidental not because of what the narratives and hype are, not because they can be a fracking powerhouse. It's because they have this conventional free cash flow that doesn't cost them hardly anything. They have the access to natural gas, and they're big into carbon capture. And as I've told you, they're hooked up to Kinder Morgan pipes. If in 3, 4, 5 years, Occidental and Kinder Morgan are both swallowed up by Berkshire Hathaway, just tell somebody that you heard it here first. So that's what's going on with Occidental. And ultimately, Occidental has a lot of debt. So I don't know that the shares are worth all that much. Remember, about half of the shares that Berkshire has for free as part of the debt deal. So if you don't think that Warren Buffett is a shark, right? He gave himself a no-lose deal. Share price goes up, he wins. Share price goes down, and he ends up owning the company through debt, he wins. So you can chase the price of the stock, but if you don't know what I'm about to say next, if you didn't already know this, probably shouldn't do it. Berkshire is buying up stock, I think specifically to get their warrants in the money so they can exercise those warrants profitably, take a larger position in the company. They're already up at 17%. Usually they stay below 10. Unless they're looking for a takeover, they don't go over 10. They don't go over 10% ownership of companies because of the rules. They're at 17%. When they exercise those warrants, it's going to be over 20. And then Occidental is going to be completely beholden to Berkshire because they hold the debt as well. My guess is that Vicky Hullab announces a deal to sell Occidental to Berkshire Hathaway this year. And they'll get $60, $70 a share, and then Berkshire is going to absorb it. And Vicky will get a job running Occidental Petroleum through Berkshire Hathaway, and they will cut half of the fat in that company again. If I were a corporate raider, that's how I would do it. I would corner the debt. I would get enough shares of ownership to control the vote, and I would hire the CEO who's going to push the deal. If you don't think that's the way things go, read some of Carl Icahn stuff. That's how it's done. That's what's going on here. So all of a sudden, you're going to have Berkshire Hathaway, Exxon and Chevron, Diversified Energy, and whoever Hillcorp is, owning a ton of the conventional wells. It's a lot of concentration. And when the demand for oil starts to fall, they'll just get rid of the fracking, right? It'll just be a price equation, supply and demand. So playing the runoff in oil is a difficult proposition because you and I can't control production. And you and I can't take money out before it goes to shareholders. Management can. So I don't like any of these companies as investments right now. Berkshire, on the other hand, they can eat that free cash flow. That's another story. If we ever get another pullback on Berkshire Hathaway, you got to buy it because of the position they're going to have not only in fossil fuels, right? They're already one of the biggest, but they're also the biggest clean energy company. They very quietly position themselves in both of those. And if they're doing it, I think you only got to ask yourself one question. How could it be wrong? I mean, it could be. Tell me how. So I've just laid out the direction this is all going. And there's going to be bumps in the road. There's going to be ways to trade it. There'll be different narratives that come in. And then they disappear like they always do when a trader's narrative doesn't work out or just the trade is done. Right? Have you ever noticed that trader narratives just disappear when the trade is done? No proof. It was just something good to say while it was happening, while the trade was going on. If you really want to understand what's going on with Occidental, I just told you. Berkshire is in the process of taking it over. And they'll absorb it so that they don't have to pay out any more dividends and they just get everything. In the meantime, figure this out because this was an overshoot short term, but in the long term, it's going to go way higher than this. So use this correction on the Fed. I think they're going to jam it to us fast and hard, and then they're going to back off. Maybe take us out for dinner or something. Put a couple $1 trillion back into the market. There's $1 trillion in repo money. So I think the Fed is going to reload its bazooka as fast and hard as they can, and then they're probably going to use it. I guess that's the only way to put it. And remember, inflation is from the oil and the supply chain. Those things will fix themselves over time. The Fed just needs to stop demand from going up temporarily because rising demand in the face of these shortages of oil, which are temporary, and supply chains, which are temporary, are creating this inflationary pressure. So the Fed is going to create enough of a disincentive so that they can slow the growth of the economy down just to control the demand side because there's not really anything they can do about the supply side. That's just a function of time. And the government has asked large corporations to put off calling people back into the office until the end of the year. That's mostly because of oil, but I think it's also because they know that COVID has probably another wave or two coming before it's really petering out. They've been so bad at communicating that. But like I said, when a virus impacts fewer people, the people who it does impact tend to be much worse off for it. So the next wave of COVID may not spread as much, but the people who get it, particularly the unvaccinated, could be in really big trouble. That is the nature of viruses. So we'll see how that plays out, but that's definitely a wild card to just keep in the back of your head is what if a more deadly strain of COVID starts spreading sometime later this year or next year. In any case, have a nice rest of the night, or have a good weekend. And I will talk to you on Monday for stocks of the week and retirement income options.